is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Dave in Claremont. Hey, Dave, Happy New Year. What's happening, man?
Happy New Year to you, my brother. How are you, sir?
I'm doing great, man. How you been?
I am doing well, man. I'm doing well. Can I throw a quote out at you?
Sure.
In the market, somebody knows something. Someone always knows something. That statement was made by a great trader by the name of Tom O'Brien about 6-7 years ago.
Oh, yeah?
And it kind of hit me like a brick. You're right. Somebody always knows something.
Hey, Carlos, what's going on, brother?
I'm calling you back, Tom. This morning I had the pleasure to talk to you and your son, and I don't want to miss the opportunity to talk to you again.
Well, I think you made some money on this bond.
Oh, yes, Tom. Your newsletter helped me.
That's a beautiful thing. We appreciate you growling and prowling with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We have the Dow Industrials up 343, Nasdaq's up 78, S&Ps are up 38. Percentage-wise, what you have out here, you have the Dow up 1.4%. You get the Nasdaq up 1.1. S&Ps are up 0.5%. Fast movement all over the place. In fact, if you just take a look at this S&P, this is about as cool as you can get. Bottom line from when I just did the update at 3 o'clock versus where we are right now, it just went up 0.5%. In a heartbeat. That being said, guess what, folks? You are going topside here, and volume is dying on the vine. You already have a confirmed ABC structure down in the S&Ps. Yeah, so the S&P just went from 2580 to 2614, up 40 points. You got to love it. If you go over to the SPY, what you're going to see when you're looking at the SPY out here is that you broke the B point of a large ABC down yesterday. Did it with big volume. We did 186 million. You were breaking the 183. That sets up a price projection of 244. Now, this is pretty intense because your high volume swing low is 252. We haven't made it yet. Bottom line, now you get another ABC structure on the way down. What we will have here is we'll have a complex ABC structure on the way down. What that means, you take the B point out, take it out with volume, get on the other side of the B point again. As you're getting on the other side of the B point, you do it with light volume, and then once again, it takes off downside. If we go over to the Qs and take a look at the NQs, that is exactly what the NQs did do. The NQs had taken out its B point, and it took out the B point on the 28th. We had 89 million, taken out the 80 million. That gave you the price projection of down into this 148 area in the Qs. Bottom line, yesterday, what do? Well, guess what? You come back, you blow the B point away again. Now, this is unusual. You don't, on a complex ABC, down or up, you don't have to take out the volume again. But bottom line, we blew it away again. Bottom line, did 85 million, taking out the 80 million. What do you have now? You're going up with light volume. It hasn't even got on the other side of the B point yet in the NASDAQ 100, which is the 158.43 mark. So bottom line, you get a bounce, once again, light volume. This is what makes bear markets, folks, okay? When you see fast counter-trend bounces, you get the identification in this deal. That's what we have happening here. And then the downside comes out of nowhere. If we go take a look at the NQs out here, pretty amazing day out here inside the NASDAQ futures. So right now, we bring this up intraday, and I'll pull this back for you, and you can just see, listen, out here today, you can be a bull or a bear. It doesn't matter. As long as you move in product, you're going to do fine. Bottom line is that we opened this morning. You had the NQs at 64.67. They go all the way down to 63.51. 100 points down. They go back topside again to the 64.82 mark. They go south again, and now we're actually over that. So you've had, let's see, 1, 2, 3, you've had 4 separate swings of over 100 points inside the S&P. That is what you call volatility. Gold contract, what do we have with gold? Gold is trading down $12.20, $13.34 an ounce. Silver down 28 cents, $16.38. Let's look at the silver market. Gold pulling back with light volume. You didn't get even to the lows of yesterday in gold. Silver is down 1.7%. Same type of setup in silver. We've done 83,000 contracts. That 83,000 is coming into 95. You know, you haven't got to the lows of yesterday. We'll see how this shakes out at the end of the day. Silver, bottom line, still does. I'd like to see a wide price spread, accelerated volume. It has broken its downtrend. What it hasn't done, as gold has done, is actually break it with conviction. But gold broke that downtrend with conviction and did it really well. Notes and bonds. Let's go take a look at the note and bond market. What we have with the note and bond market is this. 30-year bond right now, we're pulling back full point, 257,000 contracts. I believe that's coming into 300 and something thousand. Let's go look at this. Yeah, you're coming into 347. So bottom line, that's still a pullback, light volume. They want higher price, and then good old King Dollar. So King Dollar, folks, of course, is the number when you're looking at the gold contract. And what King Dollar has done out here, you're up 144 ticks. You're at 88,840. You have 2 separate swings. One's 90.02. The one I suspect that's going to go after is this 90.490. You do not have the volume on the way up here. So this is going to get really intriguing. It's dying on the vine, and dying pretty dramatically. What's going to be intriguing coming into the close out here today is that you're very close to actually failing price and volume at a price point of 89,820. Right now, we're at 89,840. So bottom line is that if they sell this off just 20 ticks coming into the close, guess what? You're going to have a failure on price and volume, and that failure will be as of the strength that it had last Thursday. Last Thursday, the dollar index had real strength, man. That's the bottom line. Spotify went public out here today. Spotify's trading at 150. It started out at 165. Bottom line, 150. Successful IPO, though, no doubt. You had Facebook up 52 cents. You get Micron Tech up $1.31. Tesla's up $16. You get Nvidia up 4. Let's go over to Tesla and take a look at Tesla. Tesla out here has been down with monster volume. What Tesla's doing out here today, you're coming into 21 million. You get 16.5. Bottom line, we'll see whether Tesla can hold the, let's see, 270.96. Yeah. We're 268.57 right now. What Tesla has done is that Tesla is way out of the higher trading. The higher trading range. Tesla's got to go up another $3 in order to get back inside 292. Stay right there, folks. My man, Mr. Basil Chapman's coming up next. He's going to be prowling. He's going to be talking about his workshop. Nice workshop coming up tonight at 6 o'clock. Stay right there, folks. Come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow Industrials up 325, NASDAQ up 64, S&P's up 34. Let's go over to our man, Mr. Basil Chapman. And tonight, folks, Basil's going to be doing a great workshop for everyone out here, 6 to 7:30 Eastern Standard Time, the power of the 4th highest peak in the Chapman wave, the peak D. The way you come into this workshop, come over to our website at TFNN. You can take Basil's newsletter, 30-day money-back guarantee. That also gets you right into the workshop tonight. And, of course, if you can't make it tonight, bottom line, we'll have it on your page for a full 30 days. You can take a look at it as many times as you want. Basil Chapman, I was just going to say it's going to be on your page for 30 years.
Very good. I'll take that.
I'll tell you, man, seriously. So,
how are you?
We got a market. Tell us about the workshop tonight, Basil.
Well, this is the one I'm going to. You can see the proof of the pudding is right here. The power of the peak D, the 4th highest peak in the Chapman wave. It's one of the methodologies I teach you. Identify the lowest bar that looks like it is the low of a certain period of time, and then you merely count each successively higher peak. Look at this. The QQQ, this is the Power Shares QQQ Trust Series, was in leg D, and then it spiked on the 13th of March to 175.21. I'm just going to get this right here. We were using the 120-minute chart as kind of some benchmark on the shorter term, and that had already made a peak D from the close the day before. So I said to subscribers, everything we've been waiting for is here. I see a divergence between the stochastic, MACD's flattening out. We've got our D. I think that we're going to go short. So we went short via the 3 times short. We had not a full position, but we had a decent position, and that was within 1 point of the NDX 100 Power Shares all-time high. And it went from 175.21 was the high. We're in from just over 174, and it plummeted down to yesterday's low of 153.88. That's that peak D right there in the daily. It's an F in the weekly chart, which means that the daily has gone to a sell mode and the weekly is in a sell mode. But I'm really concerned about the monthly chart because this is a leg D. So this is so fascinating because, so I had a question over the last few days. So what's the big deal about the Ds? But look at this. If you go to the vehicle that we have, which is the SQQ, or you could go to the QID as well, yes. It went to a D. there it is. So what I was saying to subscribers, we've got to expect some kind of a bounce. We tried to buy the Dow this morning. We expected a pop and then some kind of a dip. I have another technique. So my daily subscribers and these people, whoever signs up, will be getting my newsletter every single day. Knew that my Chapman Wave trend gauge had flashed yesterday, suggesting that there should be a 9 to 11 point rally in the futures, which should help the cash indexes. So I was anticipating there'd be a rally, then a pullback. We just missed buying the Dow because I wanted to play. I think there's a 2-3 day bounce, and then we're going to have to reassess. But there it is. You got your leg D in the daily chart of the inverse, and we also have the DOG, which is the Dow. We've shorted a few times from the very top when it was at 26,000s, and then we went long, and then we went short again. The most recent short was the bounce that went to just over 25,400. So here's the DOG, which is 1-to-1 inverse of the Dow DIA. And here's your leg D. So I'm expecting some kind of a pullback based on and that's what the webinar is about, is how do you place your trades? What are you looking at? What is the big picture? Now, I also have to add, I'm going to be spending a little time on this because in the bigger picture, we had a pattern that I talk about very often. I mentioned to you, I think 2 weeks ago, well, a few weeks ago, and then again last week, that this candle right here in February in the Dow, this monthly candle, that's what I call a Chapman Wave Roman candle. And my theory has always been for a long time, since I discovered this particular pattern, it's a very unique thing. I've never heard anyone else talk about this as a Roman candle. What happens is this: it opens after it makes a high, and it's usually an all-time high, but it's a particularly important high in a particular time frame. And in this case, I'm looking at it in the monthly. And it says if there is an open, it just pops a little higher and then plummets, but closes halfway or higher with a red candle, and it's like the second candle after a top. Watch out, because if at any point on a shorter time frame, I use the weekly chart, I said if there's a close below 24,200, be careful, because we are probably going to test and break the low of 23,360, the low of the 9th, and that's exactly what happened. 2 weeks ago on Friday, we closed below 24,200, and look what happened. We slumped to 23,344. So now I think we're in for a little bit of a bounce. You can see here on the Dow with the candle that was made, the 200-period moving average is at 23,559. I think there can be a bounce around here. I'm calling it a bounce. I don't think we've turned the corner because I'm going to be talking about this tonight as well. I look at internal low and residual low. I call that, it's like an earthquake, and then you get the aftershock. Sometimes the aftershock is actually stronger than the earthquake itself. We don't always know. So I think that what we've done, you can see in the weekly chart, I was talking about this H pattern for a while. We've made the H pattern and we've gone lower, but we've closed above it. So this is the pattern that I'm talking about. What should happen in this weekly chart over the coming few weeks? So there's a lot to talk about. And I've been through this with you before. Look, Amazon, what does it do? It makes a peak D at 1617. Google, what does it do? This Alphabet makes a peak D at 1177. I can just go through charts. SMHs made a peak D at 114.55. I can't believe the number, and the weekly charts are the same. And we've got, look, a leg D in the monthly chart of the semis. This is really an important workshop, and I'm going to be trying to focus on, for subscribers and people who come to the webinar, what can you do and how to start building a cash position. So there are going to be some beautiful buys, but they need, a lot of these stocks have moved. Look at Facebook. They've moved fantastically. Now they're under pressure. And Facebook made a peak D in the weekly chart and a monthly chart peak D. These things are very important. These stocks, I'm going to be talking about them. I think that this webinar is going to be one where we like to look out ahead. And last webinar that I did in November, I said the tax bill, if it gets passed, should see a rally into January. We got that. So a lot of the things we were looking at have come to pass. What sectors are going to look good? What are we focusing on? I think it's really it's very timely. And then they get my newsletter every day. They can send me any questionnaire they want. I usually answer within as quick as I can. So it's very important that I like to get these in a timely fashion, these webinars, as you know. I always look at the market. This is the one. This is what they get every day. Here's the Dow without the MACD and stochastic. Here it is. I explain it all every single day. Very comprehensive look at the markets. But I like to treat it as a learning experience. So my newsletter is really education as well as, looking for, QQQ is 1 point from the top. That's pretty good. And it was up 35% for some of my subscribers. I think, they've taken a little bit off. We still have the core position, but I want to change that because, when you get the exact turn, it's very hard to get back in afterwards. And the Dow is still short. And then we have Pulte Homes. Same principle. That's been plummeting since we got it.
And folks, the way you come into the workshop, come over to our website at TFNN. You're going to see right in the top of the carousel the power of the fourth highest peak in the Chapman wave, the Peak D. Sign up for the month. It's a money-back guarantee. You're in the workshop tonight. Basil, you have a great one, safe one. Of course, we look for the workshop tonight at 6 o'clock.
Thank you very much, Tom. Have a great evening.
Thank you. Stay right there, folks. Come right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it, so call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18th, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow Industrials right now up 378. NASDAQ is up 79. S&Ps are up 30. Let's go over, take a look at the SMHs. So SMHs, bottom line, also ABC structure on the way down. You get the bounce today, light volume. SMHs are down from a high of 114. And bottom line is that the volume came out of these SMHs again yesterday. And this also had done complex ABC structure. And yesterday it blew it away again, 9.2 million versus the 8.5. Bottom line, now you're bouncing with light volume. You can see the straight line moves. What happens, folks, inside the ABC structures on the way down or the way up. They're straight line moves. We've had just about as good a straight line move as you can have in these markets. So it's going to be intriguing watching this whole thing shake out. If we go to NVIDIA, which was one of the leaders, of course, on the way up, what you're going to see out here with NVIDIA, NVIDIA right now is up $4.20, 14 million shares. You're going against 35 million. You're going against 22 million. This is building cause to get into this February 6th time frame. Facebook, forget it. Facebook is toast. I mean, toast in a big way. What's intriguing here with Facebook is that, you know, you have it down good. You're at 155.93. Bottom line is that you take a look at this and you're going to see that's a decisive break. I mean, a big break, too. You blew away the swing point from February 9th. That swing point is 167. You're at 155. You blew that away with 450 million shares versus 176. This is problematic in a big way. I suspect Facebook, your next leg, hey, this is going to be intense, man. The next leg, you're talking about 135. That's pretty intense when you're taking a look at 135. Amazon, of course, what you have with Amazon, out here right now is trading at 13.93. You've had Trump all over Amazon tweeting. Is it going to make a difference? It's not going to make a difference in the post office, folks. It's not going to make a difference in what we buy. What is going to basically, what all of these stocks are doing is that they're correcting, period. That's the bottom line. So you're coming into the high volume downdraft. Amazon, 12.65. It's not done going down yet. We've hit 13.55, and the real kick is going to be, are you down there, and are you down there with volume? Because if we get down there with volume, it opens up a whole different level. If we go over to Google, we take a look at Google. What you're going to see with Google is that Google is trying to get into the gap from October 26th. The top of that gap is 987. Google hit 994 today. Yesterday we hit 990. We did hit the 980 on the 28th, and that had volume. So you're going to be right back down to that level. And Google's a good heads up just in general that how we came into the high volume low from the February 9th area. So intensity, yeah, it's out there all over the place. What is intriguing, we're just talking with Basil there, is that it's going to be very unusual if, in fact, so here, I'll give you, that's the bear hat. If I give you the bull hat for all you bulls out here that you figure this is a bounce and we're going back to the highs, when you take a look at the Dow Industrials, it's going to be so unusual if, in fact, we only touch the 200-day moving average one day and then get out of there. And that's what, so the S&P touched it yesterday, as did the Dow. Bottom line, we'll see if that shakes out. You can see just put its toe into the 200-day moving average. The S&Ps did the exact same deal. And bottom line, we'll see where the rest of this shakes out. My take is that it's going to rip it apart. And why? Because what you have, where the identification comes in here, which is pretty cool, is that you have ABC structures down a lot of stocks. They've already blown them away. They got the volume behind the move. They got the price behind the move. And now what you're going to have out here today is you're going to have the aspect that you get a bounce going, and that bounces on a dramatically lighter volume. If we go over to the IWM, take a look at the small caps out here. Small caps are bouncing with 23 million today versus the downdraft of 35. And we get, 25 minutes left. That's not going to fly in that texture either. Walmart. Let's go to Walmart. Walmart is looking at Humana. Bottom line, Walmart also looks like it's just building some cars. Walmart actually had already blown. Oh, yeah, see, Walmart's an ABC down. So check this out. Walmart yesterday, 19 million shares, blows away 10 million shares. You got to, even if I do this conservatively, you got about a 12-point ABC down, which would get you 77 in Walmart. And what's happening is that we do have a 79 is where we broke topside from October 9th. Bring this back just a little bit more. October 77. Yeah, 79 was the breakout area from October 2017. That's where it looks like it's going. The XLE, let's go take a look at the XLE. What we have with the XLE out here, she's got a little bounce going today. Up $1.10, you're trading 10 million shares. Bottom line, not even close. Not even close with how we went down versus how we're going up. What's getting hit out here again today, the tariffs and lean hogs. Bottom line, they're taking the hog market apart. Yesterday, in 2 days, we've gone from 76 a pound to 71 a pound. You get volume behind the move out here, and it looks like the hog market's going to trade on down to like the 54-cent area. So those tariffs, that's going to hit some of those hog farmers in a large way. Let's go take a look at the NASDAQ volatility still continues. This is now you're up 52. When we started the show, bottom line is that it was flat. No, we started the show, it was up 25. Within the first 7 minutes, we're up about 85. Now you're up 52. Bottom line, we go take a look at this NQM8 as we come into the closeout here. Yeah, we just went again from a price point of 64.96 down to 64.45. And what that was, by the way, folks, okay, that pop that in the NASDAQ 100 was that the couple reporters from Bloomberg were reporting that they checked with the White House, and there was 5 different people that said in the White House that bottom line is that nothing's going on with Amazon. You know what the cool thing is, folks? The cool thing is, if you haven't been in a market like this, it doesn't matter what anyone says or anyone does. That's just not the way it works. What does happen, which is really wild, is that there are always stories, okay? There are just always different stories. The stories are out there. It's like they pay attention to some of them. You get an amazing bounce. Other ones, they pay attention to them, and you go downtown in a huge way. What you want to wrap your head around, it's price, it's volume, it's buying and selling, and end of story. That's how it works, okay? You know, and the rest of the garbage that's out there is garbage. That's all it is. Dow Industrials right now up 327, NASDAQ up 61, S&P's up 33. We'll come right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Let's go over to the financials, the XLF. Let's take a look at the XLF out here, because what you're going to have out here, folks, this market's still about interest rates. Because if you remember, the first downdraft in this market, okay, bottom line, you started, well, we're in April now. Bottom line was at the end of January, beginning of February. It was actually in window dressing, which we're in right now. That was the first leg down in the market. That first leg down in the market, what was going on is that as we went down, everything was going down. Bottom line, you had bonds going down, up on yield, markets going down. From that point on, what we've had is that as this market has consolidated, volatile on the way up, volatile on the way down, each time that we were basically going lower, bonds were holding up. What we have here today, as well as bonds were holding up and we're going higher. When we went up basically 700 points last week, bonds still held up. So it's important that we look at the XLF, because it's all about banks. If the bond market and the spread is going to get larger, which normally would happen with interest rates continuing to go up, banks will make a fortune. It's not laid out like that just yet. What you have with the XLF is this. We're up 32 cents. You're trading 27.28. We broke the high volume swing low yesterday. We broke it with lighter volume, which totally makes sense, because most of the time, the first time down, it's going to be really unusual if you break a high volume low with volume. That being said, the NQs, guess what, can do it, because the NQs yesterday breaking the B point again with volume is very unusual. But we stay with the XLF. This is what you have. XLF comes down yesterday, 74 million shares. You're up today on 65. So at this particular point, the XLF will have a shot, but bottom line, to try to get to higher price. Well, the volume's not bad inside the XLF. If we go to JP Morgan, we take a look at a couple of the big dogs inside the XLF. JP Morgan right now, light volume, real light actually. That's a problem. 10 million shares versus 23 million. Berkshire, let's go to Berkshire Hathaway. Berkshire Hathaway is still the largest weighting structure inside the XLF. And Berkshire Hathaway, the buyers aren't there either. Berkshire right now is up $2.20. You have you come down with 6 million, you're only up with 3. Yeah, this is the XLF still is a little problem child out here. And if we do go back and we take a look at Berkshire Hathaway, Berkshire is trading December of 2017. So yeah, it's not bad. Let's hold on 1 second. Yeah, that is. Yeah, that's not bad. That's only December 2017. That's nothing. Bank of America, BAC. Let's go take a look at BAC. Bank of America out here. Oh, this is a little problem child. Okay, so these are oh, this is a big heads up. Okay, so Bank of America is trading right at the lows of the 5th as well as the 9th of February. And it can't get out of here. This is a problem. So we'll see how this shakes out, meaning what tends to happen is this. As you get into these high volume lows, there's some stocks that are not going to be able to hold them at all. They go underneath them. That's your heads up that, okay, that's where we're going. As a sector doesn't hold it, that is a monster heads up, because if the sector doesn't hold it, guess what? The individual equities, you can be the best equity in the world. They'll throw out the good babies with the bad babies. That's just how it goes. When selling begets selling, that's the name of the game. It's particularly the name of the game because we have so many ETF structures, and ETF structures now rule this market. And they rule it real easy, too. Apple. Let's go take a look at Apple. So you got Apple out here. Between Apple and Intel, bottom line, you know, they're saying that Apple wants to do some more of their own chips for the MacBooks. The bottom line is that that's only right now 5% of Intel's business. It could be by 2020 be like 3%. So Apple out here, you know, you're up on 25 million, you're down on 40 million. That's still a problem child. I think Apple May 1st. So Apple gets out with numbers May 1st. What we are going to have, I believe, let me get this number, because we're going to be, and you're going to be hearing a lot about earnings, because a fundamentalist figures that the only way that this market can get higher is if earnings kick in. So April 23rd, you have Google coming out with numbers. I believe Facebook is the same day. Facebook's the 25th. Amazon is the 26th. So that's going to be the big week when we take a look at numbers in order to basically save this market. I believe, let me just see if, let me pull up Toll Brothers right now. I know they're putting something in. So Toll Brothers, we talked the housing business. No, that's the 22nd. That's not it. Lennar. Oh, this is good. Okay, so Lennar's tomorrow morning. That's before the open tomorrow morning. Let's see if we have someone coming out after the close out here. Okay. One second, folks. I'm just trying to get. There we go. No, that's Pluti. That's Pluti Group is the 24th too. So tomorrow morning will be one of the first heads up inside the housing market as to what those numbers are going to be. When you take a look at the 30-year rate right now, bottom line is that if you take a look at the last 6 months, your 30. Well, the 10-year is trading at 2.75. Your 30-year mortgage right now basically is about 4.45. And that has gone up from the lows to now about 0.5%. And 0.5% is a good number. You know, the real kicker is going to be what is expensive for people. That's where this is going to come. You know, and it does make a difference. Thus far, let's go take a look at the TLT, the 20-year bond fund, and this baby came into a highs yesterday. You had light volume, but look at this. This is pretty amazing. So you went into your swing point yesterday, didn't have enough volume. You go in at the 28 million. You came in there with 12. Guess what? You're backing down with 8, and you're backing down into 9 million. You're backing down into 12 million. 120.82. Yeah. In fact, this came into the price point of 120.83, 120.82. That's a high volume deal. The TLT, that still wants higher price too. You stay right there, folks. We'll be coming right back. Dow Industrials up 339, Nasdaq up 65, S&P's up 34. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Basil Chapman has just announced that on Tuesday, April 3rd at 6 p.m., he'll be hosting a special 90-minute webinar for all of his subscribers titled The Power of the Fourth Highest Peak, the Peak D in the Chapman Wave. During this 90-minute live webinar, Basil will be discussing how to use the fourth highest peak, the Peak D, as a heads up for either a directional reversal of consequence or a momentary pit stop for further gains in the Chapman Wave. He'll also be going over what the weekly and monthly implications are for the key indices with their peak Ds and even peak Es, together with the H pattern in the Chapman Wave that he's been following for weeks with his subscribers. Now is a perfect time to sign up for Basil's daily trading service, The Opening Call, while gaining access to the April 3rd live online webinar. Remember, all new subscribers get a 30-day money-back guarantee, so you have nothing to lose. For all the details and to sign up today for Basil's Opening Call, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow Industrials right now trading up about 322. You get the Nasdaq up 60. S&Ps are up 33. If we go over and we take a look at the steel market, folks. Okay, so bottom line is that you get the infrastructure deal. Steel goes topside a big way too. Right now, you're at $34.97. This baby has not only come down, but you've come down hard. This looks like it wants to go back to $29. And what's going to get intriguing here is that just come across the tape that the guy that basically put together the infrastructure deal inside the White House, bottom line is that they just announced that he's leaving. So we'll see where that shakes out. But bottom line is that once the U.S. Steel got back inside that $41 where it broke topside, and it broke with conviction too, by the way. Bottom line, now you game down here to $32. You get volume at 32. Guess what? A lot lower is going to be coming at you. Let's go take a look at a couple more of them. So, yeah, AKS already gave it up. That's down from 674. You're at 449. All right, this is a problem child anyway. So this looks like it just wants to 405. That looks like it wants to test 405. This has come down with volume quite a bit, man. So we'll see where that whole infrastructure plan goes. But if you guess what, it's not like Gary Cohen. When Gary Cohen basically got the tax bill done, he left afterwards. The bottom line is that there's nothing done yet. So don't get your high hopes up that you're going to have an infrastructure plan that's out there. Some of the higher volume stocks right now that would, and this is going to be a low volume day, by the way. You get Facebook up 79 cents. You get Spotify, that went public. That's trading $1.50. It was trading as high as $1.65. You stay right there, folks. We'll be coming back with more numbers after the close. Dow Industrials right now up 350. NASDAQ is up 64. S&Ps are up 35. Percentage-wise out here, what you have the Dow up 1.4%, NASDAQ up 0.9, S&Ps up 1.1%.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Commodities Hour with your host, Andy Hecht. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Andy Hecht.
Welcome, folks. That's going to be next hour. That's a beautiful thing. Unreal. This is Tom O'Brien. We appreciate you growling and prowling with us out here, folks. Right now, we have the Dow Industrials closed up 389. You had the NASDAQ up 71. S&P's up 35. Gold contract down $10.90, trading at a price point of $13.36. We had silver off 27 cents, $16.40. Copper flat, $2.99 a pound. Light sweet crude up 50 cents, trading $63.49 a barrel. Notes and bonds. You had the 10-year note down 13 ticks, 120.27. 30-year bond off 1 full point, 145.25. And if we go over to that 30-year and take a look at it, what you're going to see, folks, 30-year and the 10-year, they both back down. They back down with light volume. 275,000 contracts in the 30-year. We're at 145.27. Now, this is an important area. The reason it's so important is that on February 6th, so February 6th, that is your benchmark on all the indices, meaning the S&P, the NASDAQ, the composite, the Dow. Those are all the high volume lows. It is also, in the bond market, that was a high volume high. That's where we spiked higher. We got to 146.21. Now, the bond market gave it up at the end of that day, because bottom line is that also on February 9th, February 6th, you start coming back topside. So what did we do yesterday? Yesterday, 30-year gets into that level, had lighter volume. Now what we did is we backed down, and we backed down with lighter volume. What that sets up is another run, because how we back down here, you back down with about 80,000 less, I believe. Yeah, so we're backing into 347,000. And, yeah, we did 76. So 47, yeah, 70,000 contracts. That's big contract volume percentage-wise inside that 30-year. 10-year also back down, had lighter volume on the back down. The 10-year did 1.4 million contracts. I believe this baby is going into about 2.4 million. So that would be a dramatic one. Yeah, 2.3 million. 2.3 million, 120.25. And the thing that's a mind blower, That's exactly what we hit, is 120.25 out here today. Backed into it, you know. So both notes and bonds continue to want higher price. We're in window dressing right now. Bounce, anemic volume. You get the S&Ps. If you want to see how the SPY's laying out, the SPY's got some real problems, folks, okay? And what's going to be intriguing about this is that when you take a look at the NDX 100 or the composite, their ABC structures are just under the February 9th level. The S&P yesterday blew away its B point and turned into ended up being a much larger ABC down. And right now, you're talking about, you're at 260 on the SPY. Let me bring this back a bit, because we're talking 244. And 244 would get you back to, this is pretty intense, man. Yeah, this is pretty intense. So 244 would get you back to July, well, it's not that bad, I guess. July of 2017. You know, bottom line, we went up that fast. And then if we take a look at that, let me just see how that shakes out. So 244. And if we took a look and said, okay, so what kind of a retracement is that? Oh, look at that. That's interesting. Okay, so 246 is a 0.382 retracement from the lows in January of 2016. And that's a leg in the marketplace. That's going to be a good number to keep your eye on. You know, thus far, when you put this chart up, what you've seen is that this volume just sticks out like a sore thumb. And you get volume off the highs, and that's always problematic. So we'll see where the whole rest of this shakes out. Some of the higher volume stocks in this market out here today on this light volume bounce. You have Bank of America up 28 cents. Micron Tech's up $1.29. Spotify, that went public. It's trading 149. It started out at 165, kind of sold down all day. Different type of IPO. Bottom line is that they got it done, though. Tesla's up $15, $267.53. Now, if we go over to Tesla, there's no juice on Tesla, folks. Tesla couldn't get into the gap. Tesla has to get above let's see, it's got to get above 270.96. Traded to 273, couldn't hold price. Had some good juice underneath it, so Tesla probably can do a bounce even up to 294 before this baby falls apart again. When we take a look at the aspect of, let's see, so we're in the third. Hey, the bottom line is that you're actually. So today's Tuesday. You get tomorrow and the next day. You can get a small bounce going. That's the bottom line. If we go over to the UK, we take a look at the UK. The FTSE 100. That's still under the February 6th time frame. The DAX in Germany, and by the way, the FTSE gave us the first heads up that we're basically going there, and you could break it. You have the FTSE. Oh, look at this, my God! So the FTSE's trading still underneath it by 1 point. The FTSE came off the highs of 13,600. You're at 12,002, and this is a problem for all the markets. You know, we're in a one-world market, man. Bottom line is that you have those two European markets. They can't move. Big heads up. Let's go to the Nikkei in Japan and take a look at the Nikkei. Nikkei last night down 96 cents, $96. You're at 21,292, and you're right into the bar, basically. 21,078 is the bottom of the bar. This also... not a lot of juice there. Now, what I expect you're going to see out here tonight is that we'll get a little pickup across markets tonight. We'll see how that shakes out tomorrow morning. Let's go to the GDX and take a look at the golds out here. So GDX yesterday, we did, let's see, we're going into the swing point, did 38 million shares. You're going into 53. You're going into 44. Back down today with 31. That's what we needed, man. Bottom line is, not a verification. It's a larger confidence level that you're pushing higher with volume, you're backing down with lighter volume. You already have a high volume swing high on February 14th at 23.15. And as in the S&Ps, the NASDAQ, the gold, the GDX, that level right there, the 14th, watch this. You already have a few of the golds that are already up there, and that gives you basically more hints that that's where we're going. Royal Gold already took it out. It took it out yesterday, got up to 87.52. We're right at it right now at the 86.46 mark. Stay right there, folks. Get our man, Mr. Andy Eck, coming up next.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials finished up 389. You had the NASDAQ up 71. S&P's up 38. Let's go over to our man, Mr. Andy Heck, as we do each and every Tuesday and Thursday. Don't forget, folks, Andy's got a great show right here, 5 to 6 Eastern Standard Time every Tuesday and Thursday. You can get it by just going to YouTube, search TFNN, bottom line, subscribe. It's free. You get all the programs at TFNN. Another way you can do it is just go to the front page of TFNN, hit Tiger TV. Andy also has 2 great newsletters. He has Daily Essentials, which is his daily newsletter, and the Technomental Commodity Report, which is his investment weekly newsletter. You can also get both of those right at TFNN. You go to newsletters, trading newsletters for Daily Essentials, investment newsletters for the Technomental Commodity Report. Andy Heck, what's going on? Andy.
Hi, how are you, Tom?
I'm doing great. Yourself?
Good, good. I'm good. Very good. Everything's wonderful here. End of the first quarter, and commodities went, they were about half of them were higher, half of them were lower, and the whole sector kind of settled down 70 basis points. Not much going on. The good news for carnivores is that the meats were the worst performing sector. They lost about 11%. And the best performing sector was grains, Tom. Grains first, energy second. Basically, we've been talking a lot about grains and the fact that demand continues to rise. And even though that there's significant inventories, people are very scared about this growing season. So, we saw over a 10% rise in the price of corn in the first quarter, almost a 10% rise in soybeans. Even wheat was higher, about 5.6% higher. So lots of action going on there. In the precious metals, it was only gold that posted a gain in the first quarter, up about 1%. The rest of them had some trouble.
So what's going to happen with these hogs? The hogs are getting slaughtered.
Well, this is tariffs, buddy.
Yeah, 25%. Oh, I know. I'm just curious.
Tariffs, U.S. exports. Well, there's a huge contango in hogs. So June hogs are around 71 cents. But if you look at the nearby hogs, we're down at 51.55 cents. We haven't been this low since back in October 2016. But that was at the end of the grilling season. And now we're coming into the beginning of the grilling season.
Yeah, because even this contract looks like to me it's going to 54 cents. Yeah,
the June contract. Yeah, it does feel that way, certainly, and it looks like the nearby contract could go down to 40 cents. But you got to be really careful there, because if you do get any kind of trade agreements that come out of this, these things will explode quickly. Very quickly. Meats can be the most volatile of all these sectors. These things can double, they can halve. These are wild markets. So they're setting up for lots of price action here. The one thing I can tell you is they're not going to zero.
We get cattle at a buck. Huh?
A buck, yeah.
Look at that. That's down 15% in 3 months. No, in a month.
Yep, like I said. Carnivores of the world unite. The nearby cattle, let me put that up there for you to look at. Let's see. Oh, I'm looking at the weekly. I want to look at the daily. The daily in the June contract, let's take a look there. That's GLEM, and that is at under $1 a pound. So lots of 3-for-1 ads at the supermarket.
Yeah.
Yeah. Lots of sales coming. It's just oversupply. There's a lot of supplies, but and also the fact that soybean meal went to 400 has complicated this, because I think a lot of ranchers have brought their animals early in for processing rather than to pay the high feed prices. And now they're really going to suffer, because these prices are just tailing down.
Yeah, selling begets selling, right? That's
absolutely,
intense, man.
That's absolutely true. And actually, hogs were the worst performing commodity of the first quarter of the year. The best performer was cocoa. Cocoa, got up
we're
to
at $24.98 a ton right now.
Well, we've come down, and I want to point something out here on the weekly cocoa chart. We have a gap from 23.20 up to 24.30. And, gaps are like magnets on charts, and they love to get filled. We broke out above 22.36. So the top end of this gap is still above the breakout level. So high odds that gets fixed. Listen, we rallied in the cocoa to about $50 or so above the 50% retracement level of the move down in December, from December 2015 down to the lows last July. That took the cocoa from 34.22 down to 17.69. We got back up to just under the 2600 level, which was exactly the 50% retracement level. Technically it's done exactly what it has to do, but it did rally, Tom, because there are supply problems in Ghana and in the Ivory Coast. And again, Murphy's Law. When did Anthony Ward Coco Finger close his fund. He closed it in December. What was the low in cocoa? It was in December.
That's sad. Yeah.
It's sad. Listen, Andy Hall too. Last August,
I know.
Closed his fund after oil traded to 42.05. Oil went to $66 a barrel. These guys would have printed money, but don't worry about them. They're not going to have any trouble eating.
No, I know. It's just still sad anyway, right? You know what I mean?
Yeah, of course. It's kind of insult to. It's called insult to injury. The markets insulted them by basically going down while they were long, and then it injured them, their egos, when it just, when they said, "Ooh, you were right, but you weren't there." Very tough.
So, go ahead.
Go ahead. No, go ahead.
Well, in the aspect, so planting, right? I mean, are all these Midwestern farmers, are they going to be out there planting right now? How does this work, like coming into the spring right now?
I think it's a little cold. I mean, they're going to wait for it to warm up a little bit,
Okay.
Hey, listen, my son had tickets for the Yankee game yesterday. It got snowed out.
I know.
It got snowed out.
There was a lot of money lost there, folks. I actually have a friend that does a party for 500 people, and now he had to do a double party. I mean, there was a lot of bread went south there yesterday, man.
Oh, absolutely. But listen, as soon as it's over soon. This is over soon. Unless there's something crazy. But the planting season starts now. It's basically, this is the beginning of it. And, you got uncertainty. You got a lot of action. Did you see what those grains did? Let's take a look at the soybean market. Last Thursday, before Good Friday, soybeans put in a bullish key reversal on the daily chart.
Right.
We just exploded higher. We did the same thing in corn. We didn't put in the bullish key reversal, but we exploded higher. And even wheat prices went higher last Friday. And those were all very high volume days on the final day of the quarter.
Yeah, no doubt.
Lots of price action. I mean, this is uncertainty in these markets. Now, it's very interesting that the Chinese did not include soybeans in their tariffs. Very interesting indeed. I mean, which tells you that they need soybeans. It's kind of a bullish clue for the soybean market, in my opinion.
Okay, stay right there, folks. Andy and I are going to be coming right back. We're going to be talking commodities. We're going to be talking markets. We had the Dow Industrials finish up 389, Nasdaq up 71, S&P's up 38. Our phone number is 877-927-6648. Give us a call, folks. Andy and I are coming right back.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Tom O'Brien, Andy Hecht. We do appreciate you growling and prowling with us out here. We are talking commodities. We're talking markets. Let's go over to Bitcoin for a second. So Bitcoin.
Yeah, before we get there appears to be a shooting going on in California, in San Bruno, California, at the Google and YouTube campus.
Yeah, I
just saw that come across the wire.
No, I saw that. I let's hope that's not that bad.
I hope not.
The first part of this, it said the guy that tweeted it out actually said that they're actually safe.
Good. Okay.
But listen, that just means that he's the one that tweeted it out, and he's let me see his quote right now, that they were in a safe room, but now they're outside. So we'll see where that shakes out. But
hopefully that's good, and all prayers go out to them. That's for sure.
Yeah, it's pretty intense.
Bitcoin,
there's no doubt,
baby.
Man.
Oh my God, Tom, that was a quarter. Listen, gravity, right? Gravity.
Yeah.
You had Bitcoin fall 53.7% for the quarter. But more importantly, at the end of 2017, the market cap of the entire digital currency world, about 1,500 plus tokens in this world, 615.3 billion. And that was down from 850 billion like 2 weeks before in December. At the end of Q1, 255.3 billion.
Wow.
I mean, there's no words to describe that capital evaporation in the crypto world.
Yeah, so here, let's look at this. So, because I just found this headline. Let me look at this for a second. Look at this. This is interesting. So, Bitcoin today was just up marginally, folks, okay? But look at Litecoin, Andy. It was up 14.3%. Ethereum up 10%. And what's going on with Litecoin, let's see what they're saying here. So Litecoin surges after the CEO of an American Express-backed crypto startup explains why it's moving away from Bitcoin for smart. Let's see what this is saying. Okay, so who's the guy that's saying this? That's what I'd like to find out.
These are some bounces. Let me just put a little perspective on that. Litecoin's performance in Q1 was down 53.2%. Ethereum's was down 49.75%. So, hey, 14% up today. Yeah, this is typical for this insanity.
There's no doubt.
These are wild trading sardines, right?
Yeah, so let's see who this guy is first. Okay, so this is pretty wild. American Express. Okay, so let's see. Litecoin rose 15% Tuesday after Abra, a high-profile crypto startup backed by American Express, doubled down on its decision to use Litecoin smart contracts to feature the company's exchange and wallet products. Let me put this up here so everyone can see it. This is going to be a trip, man. So we went with Litecoin as a second asset class after Bitcoin for our smart contracting investing solution for three primary reasons: commitment to Bitcoin compatibility, core roadmap, second support, Lightning support, slightly better scalability than Bitcoin in the short term, block size and block times, mining fees, which are primarily a function of number two, although this is more short-term benefit. This is pretty wild, man. They raised $40 million in funding so far, including undisclosed sums from American Express, Fidelity's venture arm, Foxconn, the Asian manufacturer. That's a big number, man. Okay.
Yeah, trading these puppies is like riding a psychotic horse through a burning barn, Tom. It's just it's just, the volatility there is, it transcends, even the look, speculators love volatility, right? It's like the Garden of Eden, big volatility. But even for a lot of speculators, the volatility in this sector is just too much to handle.
Yeah, well, what happens is that the real question is that it's not that we're in the middle. I can't stand the middle of trends. Do you know what I mean? So the real question is that, okay, now I've read of quite a few places that the cost of mining a Bitcoin is approximately $8,000.
Yeah, and electricity, right? Yeah.
Yeah. Now, if you can believe that, then it's like, okay, if we stay with the commodity business, we know that commodities can go under the price of production, but only for so long, So it's like,
but commodities have end users, and it's a different. Listen, it's a very hard world to wrap your head around, and I get what you're saying about production costs. The question is, is this the ultimate bubble? Is this going to make tulip bulbs look like nothing, or is this, is this the way the world is going? Listen, there's almost 1,600 of these tokens out there, and probably 1,550 of them are going to disappear.
Well, I just saw, Dave White, he just the SEC just went after someone for fraud. They've been telling people that, these tokens basically are securities, folks, and the SEC is giving everyone every reason in the world not to deal with it. And let me see, I'll find this one here.
I get so much spam email about these things, now. It's like unbelievable. I get 40 a day about, Bitcoin and Litecoin and all of the others. And, it's just... It's kind of like you used to get for boiler rooms with penny stocks.
No, totally. So the SEC charged Centra Tech co-founders with fraud following last year's ICO, which raised $32 million and received endorsements from Floyd Merriweather and DJ Khaled.
I know a guy I used to work at Fibro with, who started up an ICO company to bring these things to market, and they're located, in the tax-free, regulatory-free Isle of Jersey, off of the UK.
Right.
And that's the places that these places have to operate. You got to be crazy to open, to start these ICOs, in a heavily regulated area.
Oh, totally. Because you're going to be in trouble. Right. There's no doubt
you're going to be in trouble. You're going to have the magnifying glass of the CFTC, the SEC, the Justice Department, here. And then in Europe, you're going to have the, the ECB all over you and those European regulators. It's very, very difficult.
Well, our regulators are still fighting about what is it? Is it a commodity or is it a currency? And it's going to get intriguing to see who wins. Right.
Well, it's an asset class like no other. It's a cryptocurrency. It's a digital currency. So it's something like we've never seen before. To try to define it as anything but what it is very difficult, because it's really not a stock and it's really not a commodity. But it seems like the CFTC kind of won that battle calling it a commodity. But I'm still dubious about whether it is a commodity here, and whether you put the kind of fundamental analysis on it that you would, gold or something like that. And, the supporters of the digital revolution, they really take offense to gold. That's the one market that they're really against, because I think that's the one market that they're really trying to take market share from, precious metals.
That makes sense. That's the bottom line is that.
I'll tell you, I think that Bitcoin and its cousins drained a lot of speculative interest away from silver over the last year. No question about it. And I think that's part of the reason that silver's just kind of sitting here lethargically doing nothing, and it's gone down in value relative to gold. Gold.
No, I can see that. I can see that. That makes sense. Yeah. Totally makes sense. Well, listen. Right here, folks, another 20 minutes from now, Mr. Andy Heck's going to be growling a problem with you. Don't forget, go right to TFNN, hit Target TV, go to YouTube, just pull up TFNN, subscribe. It's free. All the programs come right up. Andy, thanks so much. Have a great one. Have a safe one. Of course, look for the program in 20 minutes.
Thanks, Tom.
Thank you. Stay right there, folks. Come right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Basil Chapman has just announced that on Tuesday, April 3rd at 6 p.m., he'll be hosting a special 90-minute webinar for all of his subscribers titled The Power of the Fourth Highest Peak, the Peak D in the Chapman Wave. During this 90-minute live webinar, Basil will be discussing how to use the fourth highest peak, the Peak D, as a heads-up for either a directional reversal of consequence or a momentary pit stop for further gains in the Chapman Wave. He'll also be going over what the weekly and monthly implications are for the key indices with their peak Ds and even peak Es, together with the H pattern in the Chapman Wave that he's been following for weeks with his subscribers. Now is a perfect time to sign up for Basil's daily trading service, The Opening Call, while gaining access to the April 3rd live online webinar. Remember, all new subscribers get a 30-day money-back guarantee, so you have nothing to lose. For all the details and to sign up today for Basil's Opening Call, visit the front page of TFNN.com.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental, so I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18th, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien. Welcome back, folks. So tomorrow morning, folks, let's see, what time? Lennar's coming out with numbers. This is going to be one of the first home builders coming out with numbers. So they're coming out before the market. The low for the year is $49. The high is $72. They're trading 57.09. Now, if we take a look at this, this is they generated their high out in January, $72. You're into, now this is what's going to get interesting here. So this is also at the February 6th low. February 6th low, $56.03. Bottom line, you're at 57.09. We did this today on 5.6 million versus 8.4. Let's put this on a weekly. Okay, so on a weekly, we got 55.92, tested the $56 from February 9th. This is going to be pretty cool watching this thing shake out. Now, this is also going to give us a real clue as to are these numbers going to hold at this high volume low, and this is why. This particular equity right here should absolutely hold price, and I'll show you why. Because you have a lot more than just one thing going on. If we go look at November, what you're going to see in November, the week of November 3rd, this had a down week and it was a problem child. Now, the problem child is going to end up actually helping it, and this is what it is. So Lennar breaks out. Well, here, let's do it this way first. Lennar broke out. I bet it's a full ABC up. So your A point on this was $40, which was generated October of 2016. Your B point is 55.5, so $15. Your C point is 50, which is get to 65. Okay, we went to 72. Okay, so Lennar did a full ABC structure on the way up, extended it, did more than a 1-to-1, did probably a 1 to 1.20 ABC up, did what it was supposed to do. Now you pull back. So as we're pulling back now, what you have is this, is that in November, on a weekly, this came down with 39 million shares. Got a price point of 54. Shakes it off, goes higher. That number there, though, was helping it dramatically when we came down the week of February 9th. The reason being, on a weekly basis there, you did 37 million, going into 39 million. Then what do? We go sideways for 2 weeks. We come down again, and we come down with 29 million. So your correlation goes like this. 29 million, going into the 37, going into the 39. Not enough sellers to croak that point. Now I'm going to bring this on the daily, because what this did today is that it came right down to this level again, and what you're going to see, we came down to 55.48. We closed at 57. It was testing 56.03. It was testing 5.6 million versus 8.2. That's saying that this thing's going to bounce tomorrow morning. And it's not like this thing wants to go back to its highs. What you want to get out of this, this is going to have to build a lot of cause, particularly because we're in a correction. But what's going to be intriguing about this, if this equity here doesn't hold the lows, then get out of the way, because volume-wise and price-wise, the way this is set up, this is a decent setup that it should, it's already been down there 4 separate times. The volume is dramatically contracting as you go there. So that's going to be a big heads up, man, how that whole baby plays out. Versus, if you want to see what the difference is, we know that Facebook has its problems, but if you want to see how Facebook just took everything apart, well, guess what? I mean, it has busted every swing point, and it's expanding as it's busted. The February 9th swing point had 39 million shares. You took that apart with 88 million. Then we took that apart with 129 million. Then we just took that apart with 126 million. We bring this back, and Facebook, and what you're going to see, there's a lot of different things going on with Facebook. You know, on the daily basis, Facebook has just blown apart every trend line that's out there. And when I say blown apart, when you have wide price spread, monster volume, as you blow a trend line, it's a huge problem. That's a monster break with conviction, and that's what you get in Facebook. We bring this back and put this on a monthly. Facebook looks like it's game to about it's 138. Yeah, 131. That's how that baby's setting up. And you break 131, you're going to be at 63. And if that's what we're going to get with Facebook, that's going to be pretty intense, man. There's no two ways about that. ExxonMobil, if we go to the energies for a second, because we are going to get out here. Actually, oh, hell, 1 second. I think, let me just see. I forgot about that when we just had Andy on. Oil. Let's see what we would have the EIA numbers out, I believe, tonight, right? Okay, so here it is. So crude inventories dropped to 3.28 million barrels last week. Cushing added 4.6 million barrels. Gasoline was an add of 1.12 million barrels. Distilled was an add of 2.2 million barrels. Yeah, so that looks to me like we're going to continue to see oil go south here. Let's see. Right now, no, it's staying flat. Bottom line is staying flat. Let's go over to ExxonMobil. We take a look at Exxon. Exxon got a pop today, and Exxon needed a pop, man. I mean, big time. Because what you have with Exxon, this has been a straight line move down from $89. You're at 75. We'll see whether they can get any traction going. It didn't have the volume behind this move, as none of them did today. We'll see whether they can get a bounce going, though. It should be able to get a bounce going on the short term. Longer term out here, Exxon is going after the high volume low out here of August of 2015. What you want to, as you're looking at these charts and you're looking at benchmarks, what you want to start looking at is August of 2015, because that was the last time we actually had a correction. And what is laying down at August of 2015 are a lot of high volume lows that never got tested. And when you start turning, which we've turned in this marketplace, you start turning, starts heading to those areas. What you want to look for is that whether you get the first sector that hits there or the first equities that hit there. And I'm talking about large equities that, basically you'd be surprised that they got there. That is the monster heads up that your probability gets a lot higher that's where we're going. If we look at Boeing, bottom line, that's been a leader out there. That can't get out of its way. Still hanging at the lows out here from February. Boeing has a huge amount of big down days with big sellers. When they're unloading Boeing in a big way. If we take a look at the ownership aspect of it, I'm just curious as to if someone is unloading enough that they have to pop up and actually tell us. Right there. Who's that? No, not really. They're not unloading enough to tell us just yet. You got BNP Paramus. They unloaded 789,000, about a month ago, but that's about it. Stay right there, folks. Coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver-producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. And if you have been watching those marijuana stocks at all, folks, okay, this is getting real interesting where we're getting here. These babies. So today you had Canopy Growth go down $5.60. Don't buy this thing. Bottom line, I like the setup, okay, but I've been waiting for this for a while. You have two different high volume lows here. You get a high volume low at $20.85 that from February 5th. That looks to me wants to get tested. You had volume come out of this equity today, 13 million, so that's game. That being said, the real kicker on this actually goes back a lot further to the actual breakout. And the breakout on this is down at the $17 to $13 level. And if you get action down at that level, that's where I suspect there's going to be some real opportunities in a lot of these cannabis equities that are basically taking in a good amount of money. This particular equity here, this is the largest medical marijuana company in Canada. Canada is going legal sometime in July. 2016, they took revenue of $12.7 million. 2018, $79 million. They're printing $25 million a quarter right now, and they expect that to go up to, at the end of next year, $96 million a quarter. Next time they come out with numbers is on June 27th. So I wonder if they all took hits out here today. Let's say I suspect they did. Yeah, they did. They all took hits. So I wonder what's going on out here. Something hit these babies. Well, selling hit them, right? That's the bottom line. ABC. Let's see. ABC. CN. This is the second largest one. Whoop. ABC. Yeah, that took a hit too. Stay right there, folks. A man, Mr. Andy Hicks, going to be coming up next, growling and prowling with you folks. Always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it, step into it, take ownership of it, and fly with it. Thanks for being here, folks. Speaking of it tomorrow morning, 8 o'clock. Go get them, folks.
Grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.